Hey guys, the next sponsor is Ledger, and Ledger is running a 40% off Black Friday week sale. So if you haven't gotten your Ledger yet, you are in luck. For the week of the 23rd through the 30th, you can get 40% off of all Ledgers on the Ledger website. So if you are still using a hot wallet, or you're just looking to get a backup, maybe for a multi-sig or just for some more redundancy, now is the time to go get that Ledger. There's a link in the show notes that can get you that 40% off Black Friday deal. If you want to live a bankless life, you need to get a hardware wallet. There is no alternative for storing your crypto in a self-sovereign fashion. That's why I have 4 ledgers that I use to manage my different crypto assets using the Ledger Live account as well. Ledger Live is like your home base for managing your Ethereum, DeFi, and crypto accounts. It does a really good job of aggregating all of your different Ethereum wallets if you are the type of person that uses more than one. But you can also add other cryptocurrencies like Bitcoin or Cosmos or whatever your preferred blockchain is. And then it will display an aggregate portfolio of all your accounts at the main page. One thing that Ledger is doing a really good job of is enabling all the money verbs that me and Ryan talk about with the Bankless Skill Cube enabled in the Ledger Live app. So right now in the Ledger Live app, you can buy, sell, lend, swap, and stake your crypto assets, which is doing a really good job of fulfilling all of the money verbs in the Bankless Skill Cube. Something that's new to Ledger Live is Ledger Swap, where you can swap assets one for another directly inside the Ledger Live application, ensuring trustlessness in your financial activity on Ethereum and on Bitcoin. If you want to learn more about what you can do with a ledger, go to the blog post, The Power of Ledger Live on the Ledger website, where they share some of the more advanced things that you can do with your ledger that you might not have known about. There's a link in the show notes that will take you to the Ledger shop where you can get your preferred Ledger hardware wallet. I personally like the Ledger Nano X, but I also have both. They're both great options. When you own a ledger, you own your own assets in the way that they have been designed to be held by the user and the user alone. So go get your ledger today to make sure that you are as self-sovereign as possible. The Bankless State of the Nations are brought to you by YEARN. YEARN is DeFi's first self-building community-run project, which I just get really, really excited about. YEARN is a system that seeks out yield in DeFi, and it does that in a number of different ways. A very aggressive way is with the vaults, where you can deposit your preferred asset of choice, and different DeFi experts will come in and generate a strategy for what to do with your deposited token, right? And so it'll go find ways to get yield in that deposited token in DeFi. For those who want to just earn yield on their stablecoins, the Earn system is for you, where you can deposit your preferred stablecoin and YEARN will go and figure out which money market on DeFi in DeFi is producing the best interest rate, whether it's DYDX, it's Compound, or Aave. It looks around DeFi to see where the yield is coming from, and it directs stablecoins automatically so you don't have to. Check them out at yearn.finance to get started, and also check out the stats page to see what other people are doing as well. One of the motivations behind the article that we wanted to get you on to discuss, the 9 metrics that are at all-time highs for Bitcoin, which to me are 9 reasons to be bullish Bitcoin that are just not related to like the halvening, right? They're outside demand rather than intrinsic scarcity.
Yeah, they're mostly demand side metrics, or they might have something to do with financial infrastructure, or even macro. But yeah, so this was the reason I wrote this article, is to somewhat demystify, our current rally, and like cast a little bit of light on market structure. Some of these things people don't pay that much attention to. So I wanted to say, look, there's like good, real, credible reasons why the bull, has returned.
By the way, before we get into the article, Nick, I just want to finish off that discussion about Bloomberg. So you got some flack by a contingent of the Bitcoin community for breaking orthodox on something that I didn't even know was orthodox in Bitcoin culture. But what does that feel like?
It shouldn't be.
Does it piss you off, or is there still an element where you're like, well, Bitcoin culture does need people with very strong opinions in order to sort of forcify its social defense structure? Are you just like, this pisses me off, and I'm angry about it?
I mean, I didn't catch your discussion with Melton, so I don't know exactly what you said, but I think I understand the metaphor of there being this hardcore, cadre of really, like strong-willed holders that are the guardians of, the views and the social contract, and then it percolates out from there. But with stock to flow in particular, I just think it's a faulty opinion to hold. So it's just, like, in my opinion, not a valid model. So it would be a big shame if that was somehow interwoven into the orthodox Bitcoin doctrine, because Bitcoinism, in my opinion, should be more about, like, the political objectives of the system, and not about some contrived mathematical model stipulating that it. So it would be a big shame if that was somehow interleaved into the most orthodox kind of set of core views.
All right. Well, so let's talk about some of the views that probably almost all Bitcoiners could share. And certainly we've seen this massive price run up. Like you started the article by saying it's entirely plausible we could regain 20K level again, which I mean, it's quite a stunning ascent from what was the low on Bitcoin? We're like
3,000.
Did we get below 3,000 at all? Or it was 3,200 or so?
Just above 3K on BitMEX, I think. Yeah.
Wow. And that was a year and a half ago, something like that?
I mean, yeah, the low in 2019.
Yeah.
Mm-hmm.
Yeah, really not long ago. But I mean, as recently as March, we were wicking down to the 3,500 range, which is crazy to think about.
So this, like, kind of marks the beginning of the bull market, I think, for Bitcoin. So can you talk about some of these charts, and, like, let's go through the data here and tell us what's different or what's unique about this bull run, or how we should view this bull run? I don't know where you want to start, but
let's start with the first one. Addresses of $10, addresses that hold $10 worth of Bitcoin or more.
Yeah, it's one of my favorite charts. Any of these metrics of dispersion, and the point is, there's just more Bitcoiners today than there were in 2017, and there's a number of ways to to apprehend this data. You could use a survey-based approach, which the Cambridge study is pretty good, I think, and they look at holders on exchanges. And this is just kind of more of a directional approach. It's not really telling you with any precision how many Bitcoiners there are. That would be the wrong way to interpret this. But it just tells us directionally, look, Bitcoin's getting more distributed to smaller addresses. And of course, there's a number of different ways to get at this data. I could cut this data, 20 different ways. But to me, this is just the purest single expression of this dispersion. There's just more people that have heard about and own crypto today as opposed to 3 years ago. So we have a more stable base.
So this number basically has to go up and to the right for Bitcoin to be successful, right? Like we have to see
100%.
Yeah, and so and the fact that we are seeing it continue to do that, and especially do that really, really strongly in the 2020s, is just overall bullish.
Yeah, and I would encourage you to look at this data for Ethereum too. I'm sure you have. Ethereum is showing that same dispersion, which, guess what? That's not the case for every every blockchain. Both of the major forks of Bitcoin showed concentration, and to me, concentration spells doom.
Right.
Because it basically means, like, a lot of people sold their coins on exchanges and whales bought up the coins. So you see the UTXO set actually shrink. And to me, that is a sign of morbidity. Right. You always want to, because we're talking about brand new monetary systems, you want to be distributing that to the entire world's population. So if it starts shrinking, you've failed. You're in the first inning. You've already failed.
So this is particularly important, a particularly important metric for those crypto networks that are trying to become money or global money in any real sense.
Undeniably. And I've seen more attention on the dispersion metrics recently, but in my view, they're absolutely critical. I think everybody should be looking at them.
Totally agree. All right, let's move on to the second topic of open interest in the CME Bitcoin futures. Why is this a important metric to pay attention to, Nick?
This is actually probably the most important metric in the entire article.
Wow.
Yeah. So the rally these days is characterized by participants that really, in some cases, can only participate in this market specifically. The CME is a market where if you're, a large hedge fund or an asset manager or, institution, as they say, you have likely already sort of done that counterparty risk analysis. There's no additional work that you need to do to get comfortable with this market, trading on this market. That's obviously not the case for any of these newer crypto exchanges where you have to do your diligence, and you have to, ascertain their trustworthiness. The CME is, deeply intertwined into sort of established financial plumbing. So the cash settled futures product is really critical. And the more open interest we see, that's indicative of a very certain type of market participant that in some cases is only able to trade on this specific market. So I gave the example of Rentec. That's where, probably the most successful and lucrative hedge fund in history. This was the one market that they specifically said they would be able to take their positions on. A lot of these hedge fund guys, when they come out and say they're taking Bitcoin exposure, they're talking about the CME product. And a lot of Bitcoiners will hear that and say, well, that's fake Bitcoin and it doesn't affect the spot price. But my response to that would be that the market makers that are trading on those exchanges are hedging their trades with spot Bitcoin. So I do believe that it does affect the spot price of Bitcoin. There's like all these conspiracies, a lot of gold bugs like to say, paper gold, is totally decoupled or even suppresses the price of spot gold. A lot of Bitcoiners subscribe to that view as well. But I do think this is tremendously positive. More liquidity, more open interest on this product. A few people complained to me that open interest is a bad metric, but whichever one you use to look at it, whether it's contracts or open interest, the number looks good. It's more liquid than it's ever been.
So what's interesting is we've had a few other developments this year with like BitMEX being sort of shuttered, where it seems like regulators are really trying to clean up this space, has been almost a theme. We also had, so you mentioned Renaissance Technologies and CME. We also had the BlackRock CIO, managed 8 trillion or so in assets, said something crazy positive about Bitcoin that you would have never heard in 2017. Do you remember 2017 and Jamie Dimon was big news?
Rat Poison Squared, was that when that
came
out?
Yes, like around that time, it was like, folks like Charlie Munger and Warren Buffett and Jamie Dimon. But now this time around, it seems like the tables have turned, and maybe it's partially because these institutions, well, now they could become Bitcoin bank holders too, right? They could buy in. They didn't have a way to buy in before, but now with the CME, they do.
This product, you guys remember, this product launched on December 16th, 2017, yes. Literally the precise top of the last market. Yeah. And some people attribute it to the collapse of that market, which is kind of plausible. Like you finally, as a certain set of institutions had the ability to instrumentalize a short against Bitcoin, which they couldn't do before. Totally plausible. December 17, I guess it launched. So yeah, this is really important. As you say, like if you listen to some of the reasoning behind that BitMEX indictment, they also talk about this notion of unfairness. The fact that there's offshore derivatives exchanges which can operate with less constraints or no constraints, and they can sort of outmaneuver these onshore exchanges which are regulated. And the regulators and the enforcement arms that sort of, work on behalf of the US state, they want to uphold the validity of the US regulated, capital market. And so one of the reasons they enforce is to maintain fairness and say, you can't just go offshore and compete with our American regulated exchanges. And so I think that's actually part of the reason is that they want to inculcate this vibrant, local ecology of marketplaces. And that's part of the reason why they go after the offshore exchanges, for better or for worse, is to protect and maintain the competitiveness of the CMEs and the CBOs of the world and the BACTs of the world and so on.
So because there's more volume happening on CME, which is a US friendly institution, what does that mean for the prospects of a Bitcoin ETF?
Very, very positive. extremely positive. That's probably the number one thing that the SEC called out, is they are interested in more and more Bitcoin volume taking place at markets that are kind of US regulated with surveillance sharing agreements where the market structure is apprehensible to regulators. And it's not very cypherpunk of me to say, obviously, but that's the specific thing that the SEC called out.
Right.
That's what they asked for.
Wouldn't it be interesting if the CME launch marked the top of the 2017 bull run, and a Bitcoin ETF marks the top of this 2020 to 2021 bull run,
or just continues it?
Yeah, I mean,
yeah,
the first gold ETF, I think GLD, that launched in 2004, that had $1 billion of inflows in the first 3 trading days. I think we're going to smash that record.
Yeah,
with Bitcoin.
Agree.
Smash that record.
Yeah, Ryan,
right,
you got to keep your bullish hat on, right? Okay.
Don't
take it off. Okay.
Yeah,
Can you tell that I'm a little bullish and like fired up right now?
New paradigm. There are no pullbacks, right, David?
That's
no pullbacks.
Exactly right.
Just straight up, straight ascent. All right. Realized capitalization. That's another metric that you've, I think, popularized. Nick, can you talk about it?
Yeah. So realized cap, it basically just measures the value of each individual coin at the time it last traded or settled on chain. So it's kind of a liquidity adjusted market cap. You can also see it as the aggregate cost basis of all holders. That's way, way above the 2017 highs. To me, this is a more pure market relevant measure of capitalization than market cap is. What it shows to me is that, look, Bitcoin cost, like, people are storing more wealth in Bitcoin than ever. Their cost basis is higher than ever. People are buying Bitcoin at higher thresholds than ever. In late 2017, we wicked up to these crazy levels, and that was it. We weren't there for very long. There wasn't a lot of economic activity that happened at those levels. This tells us that we've been, having Bitcoin commerce at these high levels for much longer and for a much more sustained period. So we're way, way above the all-time high here.
I've also heard this described as it's almost kind of a measure of the average Bitcoiner, basically their cost basis. So it's almost a measure of like the happiness of the average Bitcoiner, right? So like this goes up, and the average Bitcoiner is really happy because they just made it just means they made a bunch of gains, right? So, and then what's the average Bitcoiner going to do? Tell her friends about Bitcoin and how awesome it is and how much money they made. And then that creates this feedback loop, right? Is that another way to look at it?
Yeah, there's the flip side of that, though. I mean, if price outpaces the realized price, or if market cap outpaces realized cap too much, and you can obviously look at the ratio. It's a great, reliable kind of top picker. Then it's an indication that people are going to take profit, most likely. Right. If the ratio gets too significant. And so I love it for trading purposes. To me, it's one of the purest things that I've found in terms of ascertaining where you are in the market cycle.
And so where does this indicate that we are in the market cycle from your reading of it?
Midway through a rally, but by no means at the extremes of 2017. I think the ratio hit something like 5 or 6 in 2017. I think we're in maybe the 2 range right now.
More room for growth. Awesome. Yeah. Keeping the bullish hat on. Let's keep that going. Moving on to the next one. What is this? Bitcoin options open interest. Well, I'm personally going to need a definition for this one because this is outside of my area of expertise.
I mean, this is like among the least consequential charts in the article, but so we don't have to dwell on it necessarily. But yeah, options open interest is the nominal value of all the outstanding contracts. And as you can see, it's mostly Deribit that we're talking about here. But really the point is here, options give you more creative ways to express your opinion of the price, direction, and volatility characteristics of an asset. And that just basically didn't exist before. There wasn't really an options market. So
does larger and larger open interest imply that more and more Bitcoins need to be held by the parties that are participating in this?
That's a really interesting question. I'm not an expert on options, so I don't necessarily have a good answer for you. Okay. You mean like sort of as like a protocol sync kind of idea?
Exactly.
really the reason I included it was just that it shows that miners, for instance, have more concrete ways to potentially hedge their exposure should they want to. And I happen to know miners that are using options to hedge their exposure.
And all of this was not available at all during 2017.
Basically didn't exist. In size. And it just means that as a trader, you can engage with Bitcoin in a more creative way now.
Right. This is a super cool one, Nick. Bitcoin price in the Turkish lira. Why the Turkish lira?
I love Turks. I got many Turkish friends. But they're having a currency crisis, and guess what? The Bitcoin market in Turkey is booming. It's booming. There's a number of exchanges. BTC Turk is the biggest one. And of course, Bitcoin is well at an all-time high. Really, the point here is it doesn't really matter which sovereign currency you look at it at, in which terms, like could be the Turkish lira, could be the, Brazilian real, could be the Nigerian naira, the Argentine, any of these kind of weaker currencies, Bitcoin is already well past its all-time high. And we have this dollar bias because we denominate our lives in dollars. But that's actually not the case for most people worldwide. They have forced to use these more inflationary currencies. So let's just sit back and remember that these hard monies, they look extra good when you denominate them in extremely soft monies. Like the dollar is one of the strongest sovereign currencies, but there's so many other currencies worldwide that are super inflationary.
And where are most people in like a Turkey getting their Bitcoin? Is it something like local Bitcoin, or are there exchanges?
No, they have full sophisticated order book exchanges in Turkey. So they're well provisioned from an exchange perspective. It's also a country where there's like a cultural affinity for gold. And I think one rubric or heuristic you could use would be it's kind of easier for individuals living in those places who are used to storing value outside of the state or the banking system to make their peace with a new thing like Bitcoin.
Speaking of Turks that we all know and love, Meltem is in the chat saying that BTC Turk was the second ever Bitcoin exchange. So hi, Meltem, and thanks for the info.
Shout out BTC Turk. Let's go.
So to me, the Turkish, like you just said, is just like this representative of other currencies, which there seems to be just the metaphor that I've gotten from Bitcoiners is like Bitcoin is the apex predator of currencies. And so Bitcoin is just working its way up the line of weaker and weaker currencies, and it's gobbling up each one, right? Like the last one in line is just eats that one and then eats the next one, and it's just working its way up to the final boss, which is like the dollar, right? The dollar is the one like leading the charge.
So it is there's like this fiat herd of wildebeests, and Bitcoin is picking off the
weakest
weak
ones as they go. Yeah, that's exactly
ones.
Right. Yep. Mm-hmm.
Totally correct. Okay. Totally correct. And here's the twist on that. Bitcoin helps the dollar predate on the other currencies, by the way. Like not just Bitcoin, but crypto infrastructure. We've all seen this. Crypto infrastructure is proliferating dollars around the globe. We're seeing these, digital crypto dollarization, whatever you want to call it, aggressively predating on these weaker sovereign currencies. My guess is that it's because of crypto infrastructure, not even necessarily the existence of Bitcoin. I know that's heresy as well. It's because of, like public settlements infrastructure allowing dollars to proliferate globally that kills off a lot of these weaker currencies.
All right, Nick, do you have time for a quick side quest, quick detour? Because this is
on point. There we go. Relevant.
All right, quick side quest, right? So Circle partnered with the Bolivarian Republic of Venezuela. This is Jeremy and crew, who basically Circle has USDC, and they are providing this is almost like political action, wouldn't you say? Like, because they are arming a dissident government in Venezuela with USDC stablecoin in order to circumvent capital controls. Is that what's going on here?
Well, yeah. I mean, so what happened was the Maduro regime had some funds that were seized by, I believe the Treasury seized them. And then, in the eyes of the U.S. establishment here, Juan Guaido is the legitimate president of Venezuela, and Maduro is actually a pretender to the throne, even though he has de facto power. And so that's the US's attitude to this whole thing. And so they didn't see anything wrong with, appropriating the Venezuelan account that they could sort of get access to in the US banking system, because in their view, Guaido was sort of the legitimate president and Maduro was the pretender. So it's sort of in the eye of the beholder whether you consider this to be theft or sort of a rightful return of capital to where it should be. But so what's happening is that, the US said, okay, Guaido, here's your budget. These are funds that kind of belong to your government. And his move was to try and distribute them to medical workers in Venezuela directly using AirTM, which is kind of a fintech app, which is dollar denominated. I had Ruben Galindo on my podcast, quick little plug, if you want to learn about this in detail. So that's what's happening here. So it certainly is, you could maybe discuss it as slightly imperialistic or interventionist, but honestly, Venezuela is undergoing this dollarization anyway. In fact, the Maduro regime is in favor of the dollarization of Venezuela because it's kind of a palliative measure. It's making the local population less angry with the regime, the fact that they can dollarize. So they decriminalized dollar ownership this year. So, there's as much of a pull as there is a push happening.
And it's interesting. It's using crypto rails. So this is USDC. This is not, U.S. foreign policy intervention through the use of the SWIFT system, for example. This is like the first time it's being done through a stable coin.
Well, there's a last mile delivery problem, right? Because, there's no real market to spend USDC in Venezuela right now. So they still face the challenge of getting USDC liquidity into bolivars, which still exist, or into actual physical dollars. Really, Venezuela dollarized with physical dollars, remember those things?
Yeah,
we used to use them before the pandemic.
Yeah.
So there's probably about $2 billion worth of physical dollars circulating in Venezuela. That's how they initially dollarized. Then it got more complicated. They used Zelle, a lot of Zelle. But the problem is that Zelle is kind of powered by banks like Wells Fargo, and there's no sanctions on Venezuela, the whole country, but there are sanctions on members of the kind of regime, the elites. And if you're unlucky enough to have sort of, maybe your uncle went to the coffee shop that's run by the nephew of the Minister of Transport or something, and then, he sends you a birthday gift, you might have become tainted by association in the transactional graph, kind of like Chainalysis taint, that idea. So because of that, Venezuelans are constantly getting deplatformed from Zelle, from all these fintech apps. So you see there's an obvious case to be made for the usage of stablecoins or fintechs that are built on stablecoins. Really fascinating sandbox environment. But yeah, you do need to kind of close that loop a little bit and get local merchants to accept USDC if you want this to fully work.
If you want to live a bankless life, you need to get a hardware wallet. There is no alternative for storing your crypto in a self-sovereign fashion. That's why I have 4 ledgers that I use to manage my different crypto assets using the Ledger Live account as well. Ledger Live is like your home base for managing your Ethereum, DeFi, and crypto accounts. It does a really good job of aggregating all of your different Ethereum wallets if you are the type of person that uses more than one. But you can also add other cryptocurrencies like Bitcoin or Cosmos or whatever your preferred blockchain is. And then it will display an aggregate portfolio of all your accounts at the main page. One thing that Ledger is doing a really good job of is enabling all the money verbs that me and Ryan talk about with the Bankless Skill Cube enabled in the Ledger Live app. So right now in the Ledger Live app, you can buy, sell, lend, swap, and stake your crypto assets, which is doing a really good job of fulfilling all of the money verbs in the Bankless Skill Cube. Something that's new to Ledger Live is Ledger Swap, where you can swap assets one for another directly inside the Ledger Live application, ensuring trustlessness in your financial activity on Ethereum and on Bitcoin. If you want to learn more about what you can do with a ledger, go to the blog post, The Power of Ledger Live, on the Ledger website, where they share some of the more advanced things that you can do with your ledger that you might not have known about. There's a link in the show notes that will take you to the Ledger shop where you can get your preferred Ledger hardware wallet. I personally like the Ledger Nano X, but I also have both. They're both great options. When you own a ledger, you own your own assets in the way that they have been designed to be held by the user and the user alone. So go get your ledger today to make sure that you are as self-sovereign as possible. The Bankless State of the Nations are brought to you by YEARN. YEARN is DeFi's first self-building community-run project, which I just get really, really excited about. YEARN is a system that seeks out yield in DeFi, and it does that in a number of different ways. A very aggressive way is with the vaults, where you can deposit your preferred asset of choice, and different DeFi experts will come in and generate a strategy for what to do with your deposited token, right? And so it'll go find ways to get yield in that deposited token in DeFi. For those who want to just earn yield on their stablecoins, the Earn system is for you, where you can deposit your preferred stablecoin and YEARN will go and figure out which money market on DeFi and DeFi is producing the best interest rate, whether it's DYDX, it's Compound, or Aave. It looks around DeFi to see where the yield is coming from, and it directs stablecoins automatically so you don't have to. Check them out at yearn.finance to get started, and also check out the stats page to see what other people are doing as well.
Interesting, because I feel like there's something about that was bullish crypto rails, right? Mm-hmm. But also like bullish non-sovereign currencies that are credibly neutral, like a Bitcoin, or we would argue an Ether, and maybe some element of DAI, because from like Venezuela's perspective, from the anti-US regime, right? Their funds were essentially confiscated, and it's the same old problem of SWIFT, where they're being kind of locked out of the existing system, right? So US's ability to exert some sort of control over something like a USDC, where they have a centralized apparatus where they can exert that kind of control, also makes space for the presence of a non-sovereign, uncontrollable, neutral currency like a Bitcoin or an Ether.
I recently wrote a op-ed in CoinDesk saying, the U.S. should embrace crypto dollars because the alternative is the emergence of much less accountable forms of crypto dollars, like DAI, for instance.
Yeah.
And so they should embrace the somewhat, fairly neutral kind of stablecoin infrastructure, and surrender their control over the system that they exert with SWIFT. Because the alternative is much worse for them. It means that they have no control over the financial system if we go fully #bankless.
Yeah, that would make sense if you were the US government. #bankless. Tweet it out. Okay. Bitcoin held by Grayscale. This is, we had Michael Sonnenschein on a couple weeks ago, and then we played the episode like 2 weeks later, and we had to change the titles because at first we started at like there's 6 billion in Grayscale, and by the time we actually shipped the episode, there's like over 10 billion in Grayscale. So this is blowing up, right?
Yeah, and this chart's a little maybe cheating to use this one because it only goes up by definition. It cannot go down.
Right.
So Melton pointed this out on her podcast, I think, What Grinds My Gears. GBDC is a black hole of Bitcoins, or the equivalent for Ethereum as well. You can't get them out. You can only put them in. So it's the most unbelievable phenomenon really ever, I think. It's just sucking all this liquidity in. And the only way it gets out is if they wind it up and there's an ETF maybe, and then they go into global settlement or something. But really, the prospect isn't even described in the documents as far as I understand it. The Grayscale is absorbing so many Bitcoins right now. It's preposterous. And some people say, well, that's because hedge funds are creating all the units of the trust to do this arbitrage play. But the reason that the arbitrage play is profitable is because there's investors on these brokerages bidding up the financialized Bitcoin product. So that's the reason the ARB works, because there's still that sustained bid pressure on the exchanges.
Nick, I remember hearing, I think in one of your weekly recaps recently, where you noticed how Bitcoin tends to pump during business hours and how that was associated with Grayscale. Can you talk about that connection? Because we just watched Bitcoin pump from like 18,500 to...
Sorry, guys. I just lost you. I just lost the audio.
Oh, you can't hear us? Sounds like you can't hear us.
He can't hear us.
That's weird.
We could talk amongst ourselves, David.
Yeah.
Okay,
Well,
I'm back.
okay.
I'm back. Sorry, my
No worries.
headphones just flipped to my phone.
So I had been listening to one of your weekly recaps, weekly roundups with Matt Walsh on the On The Brink podcast, and you talked about how Bitcoin tends to pump during business hours, which is actually exactly what we've seen this morning, where Bitcoin jumped from 18,500 to like 19,200, and you associated that with Grayscale. Why are you associating this with Grayscale?
I might be wrong to do that, honestly. Maybe they are running their operations on the weekend or outside of business hours. But my guess is that either Grayscale or any of these institutions that are intermediating Bitcoin custody brokerage for, those institutional clientele, the NYDIGs of the world, the Fidelity Digital Assets of the world. I don't have precise knowledge of their operations, but my guess is that those US-based, more institutional in nature organizations are more likely to be active during US trading hours. And the seasonality bears this out. I mean, I looked at it on Skew yesterday. You have strong return profile during weekdays, and you've the absence of those returns on weekends. And the strongest returns in the last few months have been US trading hours. So in my view, that's consistent with the existence of a bid during banking hours. When those markets can really clear.
So Nick, one thing that keeps on, I think, surfacing as we're going through these metrics is this departure from the difference between the 2017 bull market and the 2020 bull market that we've seen so far that you've described as in maybe the first half, right? Maybe the midway point, maybe not even the midway point. And that theme is institutions. Like we're talking about the CME. We are talking about this robust options activity. We're talking about Bitcoin holdings in Grayscale Trust. I mean, these are all institutions. It feels like none of that infrastructure was available in 2017. Now it is. We're seeing it all go up and to the right, essentially. Is the bull run that we've seen thus far a result of the institutions are here? And has retail not yet arrived yet? Or is retail taking a cut of this first? Who's leading this bull market? Is it different?
Yeah, I would just say the capacity is very, very much enhanced, and that just broadens the addressable set of entities that can get exposure to the asset class. Now, we talk about institutions, pension funds, endowments. It's kind of a squishy term a little bit. We know anecdotally that sovereign wealth funds, we know that they have exposure to the crypto industry, or a handful of them do in certain ways. Some of them through the venture vehicle, through, some of those larger venture funds, some of them through startup exposure. They're getting exposure in a variety of ways. I would say, honestly, probably the biggest change, though, would just be the social acceptability of having a long position in Bitcoin among high net worth individuals and family offices. People on Wall Street, they obviously didn't want to be involved in a retail kind of clown show in 2017, which was ICO driven and hype driven. Nobody wants to buy the top from retail investors, right? Absolutely nobody wants to do that. But this time around, those people have had time to think about it and devise an investment thesis. There's macroeconomic tailwinds, which are incredibly real this time around. They weren't really present in 2017. So it's just become much more acceptable to have a Bitcoin position as, as a Wall Streeter or a billionaire, or a dissident in Russia, and you're trying to offshore your wealth. I mean, all these people now, just the general atmosphere around exposure to Bitcoin and crypto has changed. And obviously the plumbing is better. So you can actually get that exposure if you want it now. You don't have to mess around with a ledger or anything. So, I think it's there's maybe a little bit more to it than just like the institutions are finally here. It just sort of depends, but basically the industry can finally actually absorb capital from a variety of participants in a way that it just fundamentally could not do in 2017.
Wow. Yeah, that's a huge change. Yep. All right. Stablecoin Free-Float. There's a few more. We've got Stablecoin Free-Float. We've got What else?
Silvergate
Silvergate's settlement network layer, which is interesting. And then what else do we have?
The growth of crypto native credit.
Yeah. Which are the what's the most interesting thing to talk about of those three, Nick? Which would you like to dive into?
Up to you. They're all very different. I had a kind of a contrarian take on the credit. I know a lot of Bitcoiners don't like banking. I was trying to say the credit, if you look at where these lenders are lending to, and we invest in lenders, right? So we have a pretty direct understanding of this market. The consumers of this credit are arbitrage firms, market making firms, trading firms. A lot of these firms make markets. They're the reason that these pairs are tight. The spreads are thin, and the markets are liquid. So the incredibly liquid and integrated, and like sort of no arbitrage markets that exist in crypto exist partly because there's so much credit outstanding, because the cost of capital has decreased in the industry. So, and that's a great feature, right? You want the markets to be incredibly liquid. So we have the lenders to thank for that. That was the point I was making here.
Well, but this is huge, right? So this is like, we didn't have any of this. Again, this is another thing we didn't have any of in 2017. There was no such thing as BlockFi for retail. Genesis, from a lending perspective, was just getting started. And to be clear, guys, what Nick is talking about is crypto, Bitcoin in this case, collateralized loans, basically, where you can deposit your Bitcoin and then you can take a loan against the value of that Bitcoin. And that market has just totally exploded. And I think Genesis is certainly one of the leaders of that. So where do you see that, I guess, developing moving forward in this bull run, Nick?
I think we're going to see the largest deposit taking institutions, Coinbases of the world, all those exchanges, realize that their destiny is to become a bank. So right now they're banks in the sense of, I will custody your gold coins for you and then give you back those same coins, right? But in the near future, they're going to become banks in the sense that they will give you the option to have an interest-bearing account, and they will put your assets to work for you and create credit the same way that commercial banks do. And I can see you shaking your head because this isn't very bankless. This is bank full, which is the wrong direction.
Well, I think you've got an interesting slant on that, where you talk about how Bitcoin specifically enables a much more auditable trail here. But like, let's talk about banks for a minute in the next evolution, right? So first they're starting with these collateralized loans, but at some point, banking, they love to make fractional types of reserve products, right? That's how they increase margins.
The banking I'm referring to is not Lombard loans, but specifically standard commercial banking, where with credit creation, where.
So you think that's coming? That's coming then?
Undoubtedly.
Wow.
There's nothing which really stands in its way, and of course, exchanges will probably give their depositors the option to have a full reserve account. So you'll sort of have the option, full reserve, not interest bearing, fractional reserve interest bearing. But there will be an explosion of credit, simply because if you actually look at the yields in the crypto industry, the interest rates are kind of structurally high. And so there's clearly an under provisioning of credit. Even though this chart is up and to the right, there's not enough credit being created in the crypto industry. There's a structural high demand for credit. Someone's going to satisfy that demand. My guess is that one of the major exchanges starts to turn on interest-bearing accounts kind of in the near future.
That would be interesting.
I do want to touch on the stablecoin supply because that's highly relevant to both Bitcoin and Ethereum. So I think right now there's perhaps even at this point over $25 billion in stablecoins out there. And maybe I think we had like 3 or 4 billion in Tether at the peak of 2017. And so not only is there less than that, not only is there just straight up more stablecoins, there's also more kinds, and they're spread across the ecosystem. Well, that's actually not totally true. There's like 3 billion on Tron, and I think the rest is on Ethereum. So Nick, when you see just a massive supply of stablecoins out there, what does that tell you about the nature of this particular bull run?
So the one thing as it pertains to Bitcoin is that Bitcoin was the it was the kind of quote currency for exchanges, right? And it was the default currency pair for all crypto exchanges, kind of long tail altcoin exchanges, derivatives exchanges. And that changed in the last year. I think you guys have pointed out too. These exchanges became largely tetherized. Tether became the default collateral. It became the default pair that things were traded against. And so what that will have done is that will have removed some of the structural kind of reservation demand for Bitcoin. So, you think about crypto exchanges as being a sink that Bitcoin, falls into if it's the default asset. That was eliminated largely. And then Tether became the default pair. So despite that, the Bitcoin is now trading back at its all-time highs, means it's trading more on the basis of being kind of a pure macro asset, as opposed to being, like a reserve currency for the crypto industry. Mm-hmm. So that's a very positive thing in my view, is that, Bitcoin is largely eliminated from that reserve asset use case. Tether kind of replaced it, USDC as well. And so it's impressive that it was able to sort of recover from that loss of a major use case. And then as for just the, I think what this allows us to do is just reason more carefully about what we use these things for. It's clearly stablecoins are the default MOE in the crypto industry. They're what people use to transact with. And then Ether and Bitcoin, people are using more as like the base collateral in these systems. I think that really clarifies what they're for. And, we don't have to smash together all these different features or try and use, maybe you guys disagree with this, but I don't think that we have to force a square peg into a round hole anymore and trying to believe in retail. Bitcoin is this like payments asset, which is really not suited for. So the stablecoins as a cohort have taken over that activity. The other interesting thing is that stablecoins have a mutualistic relationship, I think, with, I know for your newsletter that it might be parasitic, but my view currently is that it's highly mutualistic with stablecoins and crypto native assets, because the stablecoins need something to trade against, something that's liability free. And if there's ever a run on Tether, what are they going to sell it for? They're going to sell it for the most liquid cryptocurrencies, because those can't be confiscated. If there's a worry that your stablecoins can be frozen or confiscated, you'll just trade it in for the most liquid crypto pairs.
Yeah. So I think that take could be right on, right? Because as you said, there's always the concern or the fear that the birth of stablecoins could lead to the demonetization of something, it's crypto native assets like a Bitcoin or an Ether. But really what it seems to be happening is it's really totally killing the use case of 2017. I mean, part of the 2017 ICO fervor was these futility coins, where any coin can be a currency and therefore have a monetary premium associated with it. I think the success of stablecoins completely slaughters that 2017, like that was the lazy fat protocol thesis, if you will, right? Like all we have to do is we'll create a protocol and then we'll create this medium of exchange and we've got our own currency and bam, we've got a valuation to compare with Ether or Bitcoin, right? Well, like, no, just use USDC in DeFi, right? You don't need that. Yeah. So it does, I guess, almost like act as an apex predator in the crypto ecosystem, in that it like eats these tokens that aren't a Bitcoin or an Ether and can't rise above and create this monetary premium. It just eats all of those other imposters.
It makes them more honest. These payment tokens, if you're selling something as a payment token, you're going to be, my challenge to you is, are you going to outperform a stable coin in terms of your qualities and your transactional usage? This puts a gigantic hole in the Ripple story, by the way.
Yep.
Yes. I don't know if I want to address Ripple.
Any more
no one
wants.
Yeah. Gaping chasm in the Ripple story. Ripple's a bridge asset. That never happened. But guess what is a bridge currency? Stable coins, 100,000%.
Right. All right. Last question for you, Nick. Why is Ripple going up right now then?
Ripple's really popular in like Japan and Korea.
Oh God.
I don't necessarily have a ton of color. It could also be that people think the next administration is going to be favorable towards Ripple. That's plausible. Ripple invested a ton of money and energy in lobbying for good outcomes in DC.
Oh, God.
Maybe what's being repriced right now is their prospects of getting avoiding the security moniker and being called a commodity. So that is one theory that I have to explain the price action.
And it changes nothing about the overall fundamentals of the project.
Yeah, virtually no usage as a bridge currency.
Yeah.
Obviously, just use stable coins instead.
Yep. That's exactly right. Nic, thank you so much for putting the work into this article and then also coming on to share it with the Bankless Nation. I'm particularly bullish, but again, looking at all of this data, it's nice to have the data to back up the bullishness.
My pleasure, gentlemen. Thank you for having me back. It's always fun.
Thanks a lot. We'll do number 5 pretty soon here, Nic.